We detected an unusual trade worth $2.5 million on Upstart stock, ticker symbol UPST. And what's also very unusual about this is that Upstart reports earnings in a few weeks on February 11th. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish in buying Upstart before earnings or bearish in selling Upstart before earnings. Because as we all know, the rich have more access to information, including leaked insider information such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so to level the playing field, let's dive into the data as usual. As we can see here on the options time and sales tape, these February 14 options at the 60 strike puts were being traded. We can see multiple trades happening for these options, and they're paying about $510 each. And so if we dive into the option chain to find out the total number of contracts that were being traded for these February 14 options, we can see here that there were 5,000 contracts being traded for these 60 strike puts. And so if we calculate the estimated trade cost of 5,000 contracts times the $510 each, as we saw on the options time and sales tape, we get a total of $2.5 million. But keep in mind, earnings is coming up, so this is a higher risk trade in comparison to the trades that we share on our website. If you want lower risk, higher probability of profit trades, then go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We will put a link at the top here where you can learn trading strategies to further reduce risk while increasing the chance of profit. Because not all of these unusual trades will be profitable. Even this one might be a loss. But as long as we diversify with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now with that said, we also traded these put options. You can see our position over here. POS stands for position, green means buy, where we also bought these 60 strike puts, but we use position sizing to manage our risk. And so when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of Upstart stock, where it is currently trading over here at $66 a share, and on the y-axis represents the profit loss. Note the zero break-even line here. And so when the purple and blue lines are above it, it is a positive gain, and if it is below it, it is a negative loss, because this is a short bearish trade, and we can confirm this on the Greeks. We have a negative delta trade. If it was a long bullish trade, it would be a positive delta trade. But be aware of the risk on this trade. We have a negative theta decay, and so as time goes on, these options will lose value, and that is why the purple line drops down lower to the blue line, which represents the expiration date, and the purple line represents the current date. And so as time goes on, the break-even shifts down lower, and so these put options need to trade lower than $55 a share at expiration to be profitable, even though these are 60 strike puts. And so be aware of the risk with trading this. And that is why we use position sizing to manage our risk. We don't put a lot of capital into these higher risk earnings trades. We put most of our capital in the lower risk, higher chance of profit trades that we share on our website. If you want access to those, we'll put a link to our website at the top here. Let us know in the comments below. Do you think Upstart stock will crash after earnings based on this wealthy investor's trade? Or will the stock rally up and these put options are just a hedge for underlying shares that this wealthy investor has? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.